The Federal Reserve is expected to cut interest rates by 25 basis points this afternoon, the second rate cut of the year, and Wall Street is surging to new record highs. Welcome to the Big Money Show. I'm Jackie DeAngelis, along with my co-hosts Brianna Lyman, Lydia Hu, Brian Brenberg, and with us for the hour, Making Money host Charles Payne. Great day. Oh, I thought you were going to fist bump me.
Oh, yeah, of course.
Great day to have you here. All right. The president says that the economy is humming in spite of the Federal Reserve, not because of it.
Energy prices are down, gasoline prices are down, grocery prices are down, mortgage rates are down, despite the fact that we have an incompetent head of the Fed. He's incompetent. I call him Jerome Too Late. He's always too late. Jerome Too Late Powell. But he's out of there in another couple of months. We'll be very happy about that. We're not going to have a Fed that's going to raise interest rates because they're worried about inflation in 3 years from now or something.
Poor little too late. But here's the big picture. The decision today may set up one more cut before Christmas. And with the markets at all-time highs, the White House is betting cheaper borrowing means more spending, more building, more momentum heading into 2026. So for too late, Mr. Powell, it's better late than never. And that's what the market seems to be broadcasting today. It wants its rate cut, Charles Payne. Who wants it now? Yeah,
listen, it did pretty good under restrictive policy. So imagine with accommodative policy. Listen, I'm really more optimistic about this for small businesses, for mortgage rates, for the average American, for credit card bills, which are now 24% to go, maybe back under 20%. I'm looking at this as a cut from Main Street more so than Wall Street. Look at the stock market, and then just start getting hot just now. Right. This is the fourth year of the rally. So this means it began the rally under restrictive rates. So this whole myth that, hey, if you cut, stocks are going to go up. Stocks, gold, bonds, money markets, everything did extraordinarily well. And the wealthiest people in this country became extraordinarily richer, even more rich, maybe the richest they've ever been compared to the rest of the nation under restrictive policy. We need this from Main Street. Yeah, and that is true about the markets and the surge that we've been following on this program, but all across the network as well. And Brian, when it comes to rate cuts, I typically want to see a balance point. Where, savers can benefit, the market can benefit. It's like there is a Goldilocks point for rates. We are higher probably, and so I think there is room to come down. I think sometimes when the president is joking about how far we should go, it might be too much. I don't want to see interest rates at zero again forever because that's not sustainable. But he's got room here, and I think that's what, Charles is pointing out. It will help Main Street.
Yeah, I've been thinking about that a lot with all the jobs data because we had the conversation yesterday. We were talking about UPS jobs cuts, and that's kind of been this rolling. We're going to talk about it today as well. And I'm thinking about these small businesses who are not getting, and disagree with me, Charles, if you think this is not true. I don't think they're getting the AI benefit that a lot of big companies are getting right now. And so what can help them kind of get back on their feet? And I do think borrowing costs are huge for them. Yeah. I think they're probably going to be on the back end of getting the AI benefit, but they could be on the front end of their borrowing costs going down and being able to bring employees in and expand. Talking to a guy who imports coffee the other day, and he's struggling with the Brazil tariffs, right? Because all of his coffee comes from Brazil. But he's saying, the trick for me is I've got to float that. I've got to find ways to finance that until I can figure it out. Right. With borrowing costs high, you can't do that. So you put the tariff story together with businesses being able to manage their cash a little easier with borrowing. I think that actually helps. So I'm optimistic that this can be a help for Main Street. Okay.
You mentioned jobs data. That probably is the focal point for Jerome Powell. And because of the government shutdown, that's the one data point that he's not going to have. He does have CPI data. We saw a slight tick up there, but nothing way too alarming. Lydia, do you think there's any chance, you never know what too late will do, but any chance that he turns around and says, well, without the full picture of the data, we can't do something here?
Oh, gosh. I hadn't really thought about it.
You don't really have to answer that.
I mean, I don't even know. I don't know that I would expect him to do nothing. I think the wide expectation is, 25 basis points? But I was actually thinking about not just how many rate cuts we get moving forward, but how deep of a rate cut we should get. The longtime criticism for too late is that he's been too slow to operate. And how do we really know how fast he should operate or how fast the Fed should operate without this data. It's not just the jobs data, but it's also, we don't know the employment rate for September and October. You know, in many respects, we're flying blind. We do have other places that we're looking, ADP and the CPI report that you just mentioned. But yeah, I have major concerns that we're making decisions that are, again, just putting us behind the ball when we should be acting faster to bring more relief to Main Street.
Well, too late, Jerome
And
Powell.
on that point, who do we have to blame for that? The government shutdown that's continuing to linger.
It's definitely not helping.
Yep.
Too late, Mr. Powell has been accused of allegedly playing politics, Brianna. Do you think that he wants that to be his legacy, or that he will cut rates based on the slow jobs data that we have seen so far, which also indicates that he has been too late here? I mean, he's got the power right now, and he's got sort of the wind behind him, even though there are always some dissenters that don't necessarily go along. Stephen Myron, for example, is going to be somebody who is not going to agree if Powell were to say, let's not cut. But your thoughts on how this all looks politically?
Yeah, I think Jerome Powell was trying to withstand so-called pressure from President Trump to cut these rates. And back in March, he kept saying, well, there's going to be this tariff-induced inflation. That's why I'm not going to cut these rates. That never materialized, right? That was part of this propaganda, push we saw from the left that these tariffs were bad. So he held out, and that was for political purposes because it was a Democrat talking point that tariffs would cause massive inflation spikes. That never happened. So to your point, now he's having to play catch up with President Trump, who his political instinct and his economic instincts have been on point. He's been calling for these for months. Now he's getting it, maybe not as much as he wants, but he was right from the get-go. And Jerome Powell deciding not to do it in the beginning when he probably had more opportunity and more reason to do so does lend credence. So maybe he was doing it because he's being political.
All right, let's go to the flip side of this equation. Everybody likes to watch the stock market go up. It feels good, but we've seen this story before, although, as I mentioned, when interest rates were closer to zero, Charles, and it's that spiked punch bowl sugar high that keeps a market elevated when it might not necessarily be that way. We're dealing with an AI issue as well, a ton of growth here. We're going to talk about Nvidia in just one second. But is this what we actually want to see right now when everything is so hot? So to the initial point that you made, markets have been going up despite interest rates.
This would be the fifth time the Fed has cut when the market's at an all-time high, and those other 4 times the market kept going up. The polar game of when the stock market will stop going up is one I don't play, because either you're in it or you're not in it. And the same people that told me on my show when Nvidia hit $3 trillion in market cap, get out of it because it's hard to.
Too big.
It's hard
too
to. Yeah. Well, $4 trillion.
We missed $2 trillion.
$5 trillion. Yeah. I mean, so. And I got to tell you something. I'm looking today's earnings report. By the way, I do want to point out yesterday was the worst good day in history.
Okay.
We had the fewest participants in an up market. Only 100 names are up.
Okay.
So, and today only 4 sectors are up.
Right.
So there is something beneath the surface happening with respect. So to talk about, that's why I'm not really a big fan of the market per se, because if you carve out certain parts of the market from others, the story changes dramatically.
Are you alluding to some of the headlines, for example, about job cuts? Because that's something that's on my radar right now.
Well, job cuts obviously are huge. There's no doubt about it. But like today, for instance, Caterpillar, number 3 stock. Caterpillar is another name that should have been crushed by tariffs and China retaliation. They do a lot of business over there. But they have the AI story today. Western Digital. Carrier is number 10 mover. Carrier will be getting a big chunk of that energy business, right? The Westinghouse deal that was announced yesterday and those kind of things. Corning, obviously, we know what's happening with Corning. So you've got the winners, and they are just absolutely phenomenal. But those names who aren't participating, they're not expensive. In fact, the irony of all ironies is anyone who's based their investing on cheap stocks, like, for instance, the defensive stocks. Mm-hmm. This is the worst performance defensive have ever had against the S&P in history. So you've actually not only missed the rally, you are actually, watching everyone else get rich. So I'm just saying, got to be careful about trying to pick the top and trying to guess when a company or a sector has peaked, particularly now, because this is a unique time. This is not the sock puppet .com era. This is something real, the 4th Industrial Revolution, and it's still very, very early innings.
Can I ask you a quick question on that? Because you've said that on this show many times, and I agree with that. Like you don't want to miss opportunities to make money, but you also want to have sort of a fundamental understanding of what's going on in the market as well, not just momentum. Some of this private credit stuff freaks me out a little bit.
Yeah, me too.
This is not equity, but it's because it looks so much like the slicing and dicing of mortgages we saw in 2000.
Right.
It's not mortgage debt now; it's something else. credit can screw up an economy really badly. How do you bake that in to not wanting to miss out on markets going up, but also not wanting to expose yourself?
I'm watching the key names that are publicly traded, Blue Owl, Apollo, the regional banks, watching those very, very closely. They've kind of in the last week have found a base. Blue Owl, you have to watch the most. I think that's the one with this sort of PIK revenue, PIK situation. They've got, it seems hit or miss to me with the credit side. Obviously, Apollo, it's such a big, powerful name, KKR. So keep those on your radar. And I was in Apollo. I had my subscribers in it. We took 11% loss. I was too afraid. I said, let's get out.
Interesting.
Yeah. So, but keep those on your radar because it is an opaque area. Yeah. As much as they tell you it's not opaque, right? It is opaque. We know a lot more about publicly traded companies than we know about the PE world. We do know one thing. They bought everything that moved. Money was cheap.
Right.
I don't care if it was a trailer park, it was HVAC, whatever it was, they bought it. And now they can't find a way to unload some of this stuff. And so I am concerned about that as well.
Okay, that's interesting.
All right, let's use this opportunity to pivot, take a look at shares of Nvidia, because this is the world's most valuable company, people. It's become the first to cross that $5 trillion mark, as we mentioned. In its market cap, CEO Jensen Huang projecting $500 billion in orders over the next 4 years. President Trump meeting with Huang in South Korea today. The company just inking a brand new deal with the Energy Department to build 7 supercomputers. So there's so much news here. But if you believe Jensen Huang and you believe in the Nvidia story and you believe in AI, that actually brings us to some of that private credit discussion, because that's what they're investing in. Charles, do you feel like $5 trillion, 3, 4, 5?
One thing is that I try to tell people all the time, don't base whether a company is expensive or cheap based on the stock price. You will lose more money in the market buying stocks under $10 a share than you will buying stocks over $100 a share. I can tell you that right now. So the share price means nothing if the underlying fundamentals are improving. I've been calling Nvidia the modern day Berkshire Hathaway.
Right.
This guy is building something out of this world. And I really feel like he's making himself sort of the Warren Buffett for the next 20 years. He's got his fingers in every part of this, and he resurrects names. I think they had a deal with Nokia or someone.
They did. That's the deal. Yeah.
He's resurrecting. Oracle's been resurrected, right? Intel's been resurrected. They're resurrecting names that we kind of said, they were one of the good names of yesteryear.
You're persuading me, because my first thought with Buffett is he bought boring stuff that nobody liked, that wasn't interesting. The high flyers didn't want it, but he saw value. My thing with Nvidia, it feels like they're buying the not boring stuff. They're investing in what everybody's hyping about, but maybe you're making the case that they're taking some companies people forgot about as well and kind of dragging them into this new world.
They are.
Yeah, I like the resurrection story, and we've seen it many times. IBM is another example of that. You can argue Microsoft, we can go on, and the companies have the fundamental infrastructure in place.
Right.
So I like looking at a company like Intel and seeing it come back to life, because...
Especially when we have a stake in it, but don't tell Brian.
No, I know, but,
I haven't made peace with that one yet.
I think he's onto something, because the question is, why would you reinvent the wheel when the wheel is there? It just needs to be reconfigured a little bit.
A little bit, yeah.
The wheel's sometimes rickety. You maybe want to take it off the spokes, but whatever. We can debate that one later.